You've seen the headlines, right? Historic housing downturn, prices slumping into 2026. It's the kind of thing that makes anyone thinking about buying or selling just freeze. But here's what those headlines don't explain. The Greater Toronto Area is not one big monolithic market. Some areas are feeling pressure from rising inventory and softer prices, but a handful of suburbs are playing by completely different rules. And it's not random. It's driven by real economic forces that create opportunities, rare opportunities for people who know where to look. Stick around because I'm breaking down the 5 suburbs positioned to navigate the 2026 correction and not just survive it. And if you've been watching and wondering what to do next, this might be the insight you need to hear. Okay, let's be honest. The market correction is real. Across the GTA, everything is cooling down. Affordability is a major issue. Sales are uneven. Detached home prices in some parts of Toronto have slipped about 5% year over year, and condos have taken a hit too, especially a wave of new supply hitting the market. So what do most people do? They freeze. They're scared of buying something that might even dip in value right after they sign. But here's what the headlines miss. The GTA is made up of dozens of micro markets. Each one tells its own story. Some areas are watching inventory pile up, and others, believe it or not, are showing signs of real resilience and strong long-term financials. Those are the markets we're focusing on today. Markets cushioned by strong local job forces, big infrastructure investments, and steady population growth that keeps demand alive. While some people panic in the dark, we look at the data and find where real value lives. This isn't about finding the perfect bottom. It's about spotting stability in a volatile market. Now, by the way, a lot of you guys watching still aren't subscribed to the channel. So before we get in deeper, hit that subscribe button so you don't miss the updates that show where the real opportunities are. Let's start with number 5. Whitby's biggest advantage right now is simple: affordability. For years, it was seen as more of a bedroom community, but that story is changing really quickly, and the numbers heading into 2026 show some real resilience. The main driver here is price. Whitby isn't cheap, but it's much more accessible than most of the GTA. Earlier breakdowns show its price to income ratio are far healthier than other areas. Buyers aren't just stretched to the limit here, and that affordability creates a solid demand floor that helps prevent steep drops that you've seen in some of the pricier suburbs. Now, as interest rates settle, that affordability becomes even more attractive, especially for first-time buyers and young families that are pushed out of some of the closer suburbs. But Whitby's story isn't about just lower prices. It's growing its own local economy. More people can actually live and work here. That strengthens the community and builds long-term stability. The wild bidding wars are gone. Buyer interest still remains strong. Rental demand is high, and that really signals something important. People want to live in Whitby. For investors, that's huge. Long-term value potential plus consistent rental income really makes Whitby a solid 2026 pick. Now, if Whitby is about affordability, number 4 is about balance. Number 4 is Burlington, the Goldilocks market of the GTA. Perfectly positioned between Toronto and Niagara, high quality of life, plus mature, stable demand. While some suburbs saw some wild swings, Burlington stayed controlled and measured. One of Burlington's biggest strengths is its balanced market. When the post-pandemic frenzy really cooled down, Burlington didn't just collapse. It normalized. Inventory rose, giving buyers more options and more breathing room. That's what a healthy market looks like. It's not volatile, it's not speculative, just steady demand from real families and real professionals who love the lakeside lifestyle with an easy commute. And infrastructure matters here. GO service has improved, highway access is excellent, hybrid workers love it. As Toronto's affordability struggles continue, spillover demand grows even stronger. Even with some softening, Burlington's market keeps absorbing supply at a healthy pace. If you're looking for a lower risk and long-term value in 2026, Burlington is a strong contender. Speaking of strong fundamentals, number 3 is built on jobs. And that number 3 is Markham, a true economic powerhouse. You've heard it called Canada's high-tech capital, and that title matters. Markham's market is supported by hundreds of tech companies, IBM, Oracle, and many more. That concentration of stable, high-paying jobs creates a constant demand from skilled professionals and their families. Demand driven by employment doesn't just disappear because broader markets cool. Hybrid work is here to stay. and Markham offers the perfect blend of suburban comfort and a thriving tech ecosystem. Yes, prices have softened. Yes, inventory has climbed, but the economic base is strong, and that gives Markham a resilience few suburbs can even match. Add its diverse housing stock, Unionville homes, modern condos, family neighborhoods, and you attract buyers from every category. Then you add the new York University campus. That's going to ignite the rental market even more, making Markham a strong pick for investors. Markham isn't just a suburb, it's a destination. And for buyers, it's a bet on a future-ready economy. If market is the established heavyweight, number 2 is the suburb racing forward the fastest. Now, before we get into that, let me pause for a moment. If you've been thinking, okay, all this sounds great, but I still don't know if it's the right time. I don't know what I can afford. I don't know where to start. You're not alone. That's exactly why I offer a free 15-minute discovery call. It's not a sales pitch. It's a quick, pressure-free conversation about your situation, budget, your timing, your questions, your concerns. Whether you're buying your first home or looking to invest, or simply looking to understand what's even possible in this day and age, this call gives you that clarity. Even if we never work together, you'll walk away with a clearer picture of your options. The link is in the description. I'd love to hear your story. All right, let's talk growth. Number 2 is Milton, a town defined by explosive growth and huge potential. If the earlier suburbs were about stability, Milton is the rare blend of stability and rapid expansion. Milton's superpower is demographics. It's one of the fastest growing communities in the entire country. Young families, new immigrants, constant population growth. And forecasts show that growth continuing. More people means more housing demand that helps cushion any market downturn. The infrastructure is booming too. You have the GO train expansion, Highway 401 widening, a new Wilfrid Laurier University campus. These aren't just small upgrades. They're long-term economic catalysts. By 2026, they'll be even more visible in the market. Sales in Milton have held steady, even while the broader GTA has cooled. With new construction slowing across the region, Milton's population surge puts pressure on the resale market. For long-term buyers, Milton is a chance to get in while the momentum is still building. Now, if Milton is the growth engine, our number 1 pick is all about legacy and stability. Number 1 is Oakville, the suburb that consistently proves its resilience. Now, think of it as the blue chip stock of the GTA. You have prestige, top tier schools, a strong luxury market, fantastic transit links. It's a community built on long-standing fundamentals. Oakville's biggest strength is its ability to hold value. While other markets are swinging wildly, Oakville stays stable, and that's because the demand here comes from high-income families who aren't as sensitive to rate changes. The schools, both public and private, are some of the best in the country. That creates constant demand from affluent buyers. The luxury segment anchors the entire market. High-end activity supports prices across the board. Now, 2025 saw a cooling, but it wasn't a crash. It was a healthy correction. Heading into 2026, forecasts point to stability. Prices holding better here than almost anywhere else in the GTA. Even during the correction, Oakville saw brisk sales activity. Rental demands remain strong for condos and family homes. Oakville isn't just safe, it's built to thrive on its fundamentals. Long-term security is definitely the name of the game here. So there you have it. Even though the big picture for the 2026 GTA market might feel uncertain, the data shows some suburbs are outperforming the chaos. From Whitby's affordability to Oakville's long-standing stability, these 5 communities prove there's still opportunity if you know where to look for. But remember, not every suburb is holding strong. Some have seen sharp drops, and those drops can create opportunities too, if you know how to navigate them. If you want to dive into that side of the market, check out my deep dive on the Toronto suburbs where home prices have absolutely collapsed. It's right here. Let's break down what happened and see why those areas might still be worth a second look.